Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Right now, we're in profit season with a whole stack of ASX-listed companies reporting results this week and next and beyond. In fact, it's always great to speak to experts about the stocks they're watching. Of course, this is general information only, and you should certainly seek professional advice before making investment decisions. Josh Gilbert is a market analyst at social investment network eToro and a regular guest on this podcast. Josh, welcome back to Fear and Greed.
Thanks for having me back, Sean.
So how do you get across earnings season? I mean, as a reporter, I'm trying to cover all these stories and I'm very much at the top line, like, kind of what's the profit, what's the share price done, what's dividends. How do you, as someone's actually got to spend money, how do you get across all this stuff?
Yeah, look, it is really difficult, especially when you get a big bulk of companies reporting within the same week. Unfortunately, companies don't tend to look after us in that sense, whether it's US or Australian reporting season. Yeah, it all comes at once. But I think really as an investor, the best way to sort of look at this is pick out the stocks that you either own or that you want to focus on. You're never going to be able to get across all of these stocks. So pick the ones that you want to focus on early, follow their previews, follow their results, and that should help you throughout earnings season as well. So find an economic calendar where you can keep up with sort of all of those names.
Okay, so taking that thread, what are the sorts of areas that you are interested in this earnings season? And then I'm going to go and ask you about how you think some of those stocks will perform.
Yeah, I think, look, expectations are going to be high, I think, really, because we've got the ASX 200 sort of sitting near record levels, right? We've got the RBA finishing its hiking cycle, so there's lots of good news there. We're getting closer to those rate cuts, which is obviously giving investors plenty of optimism around the local market. So I think we're going to want to see some good numbers from these companies. Investors are going to want to see that to ultimately be impressed, even though growth is set to be pretty timid. I think miners, the material sectors, that's probably going to be really one that stands out to me, given what we're seeing in China. We've got, a real estate sector that had a really great end to 2023. A travel sector, Qantas, under a lot of pressure at the moment as well. Those are probably the three that sort of stand out to me, but I think it's going to be a really interesting reporting season either way.
Okay, so let's look at the materials sector, and materials covers many of the miners. There's the big three iron ore miners, so BHP, Rio and Fortescue, but beyond that, there's, literally hundreds of companies. Let's take lithium first up. Where do you think all those lithium stocks are going? They're shorted totally on the market. What's the outlook for them?
Yeah, look, I mean, it's been a really, really tough time for lithium miners. We're seeing lithium prices continue to sort of free fall to even sort of start this year. That's sort of coming from this idea that we're seeing EV demand fall or weaken ultimately. Tesla share prices obviously had a hit in that sort of same period as well. And I think the big theme of this reporting season is how these companies are going to be able to sort of deal with ultimately the lithium winter, really. We're probably going to see plenty of cost cutting through jobs, pausing projects, exploration sort of being put on hold, dividend cuts potentially if those lithium miners are paying dividends. And I think really investors are going to want to see what those businesses are doing to get through that challenging period, because that's going to be really important. How are we going to get to the next stage? I think a lot of investors understand that it is a tough time. So we're not going to see, the record results that we have done in the past. But who can navigate this period the best are the ones that are going to be coming out on top. And then I think investors will stick to.
Okay, what about the big three miners, and particularly Rio and Fortescue, very, very reliant on iron ore prices? How do you think they'll go this reporting season?
Yeah, well, this is, again, a tricky one, I think, for investors to sort of focus on, because we've got an economy in China that is continuing to sort of struggle. Last week, we saw 4 months of falling prices in the region. So deflation is essentially becoming entrenched into the economy. And what we've seen so far from China is that policymakers are kind of, over-promising, they're under-delivering. And I think we're going to need to see more support there to sort of lift demand, and ultimately that's having a big impact on the real estate market, which of course has a huge impact locally. So iron ore prices have actually remained pretty resilient given all of this, which has actually given a bit of a boost to miners over the last sort of few months as well. So I guess the focus for me going into these results is going to be the outlook. That's going to be really important. What's the next 6 months going to look like? We've had iron ore prices remaining resilient, Will they remain resilient though, moving into the next 6 months of the year if we don't see a turnaround in sort of China's economy? So that's going to be, really important. But I think the good news is that support is on the way for China. I think that's probably what we can take away. The bad news that we've had in the last couple of weeks is probably good news in the sense that it means they've got to act.
Stay with me, Josh. We'll be back in a minute. I'm speaking to Josh Gilbert from eToro. You mentioned REITs earlier on, the real estate investment trust that covers a whole manner of sins, really, from kind of big commercial office buildings through to the local medical centre. What part of that are you looking at? What do you think could do well, and perhaps what part of REITs won't do so well?
Yeah, well, look, real estate was the best performing sector on the ASX 200 in the last quarter of 2023. That's pushed valuations higher. And it's ultimately meant that expectations are going to be even higher then as you sort of head into reporting season. But it's coming from this view that rate cuts are on the horizon. These sort of REITs and these companies were out of favor in the last sort of couple of years, as we've had decade high interest rates, but they're getting a little bit more love now, given that sort of rate cuts are coming into sort of view. I think the risks maybe lie within sort of the retail and office sort of side of the real estate sector. I think that may be a bit of a weight on the sector, but I think we'll get some positivity from sort of the industrial side of things. If we look at somebody like Goodman Group, for example, they've had an excellent run even during this period. They're working very heavily on the industrial side with the likes of data centers, which essentially is what's driving AI. That's everything behind AI. So they're having a fantastic time at the moment. So it's no surprise to probably see some demand there being really high. So I think anything around industrial is where we're going to find the bright spots. Retail and office is where we might see a little bit of weakness, but I think that gives you sometimes a little bit of room for upside when there's not really much expected from sort of retail and office, but there is going to be big expectations on the industrial side.
Josh, you say something there which is just worth pointing out. If you want to play AI, it's not just about going and investing in the big AI companies. You can play AI by getting the service providers around them, and say Goodman being an example of that. They provide data centers. There are lots of opportunities with these mega trends, be it environment, be it AI, where you don't actually have to invest directly into those companies. That's right, isn't it?
Absolutely, yeah. So, I mean, look, obviously the main name when we think of probably when it's sort of come to AI, on Wall Street, on markets over the last sort of 12 months is NVIDIA. That's sort of the name leading the charge here. There are plenty of other businesses that are really sort of benefiting in the background, and Goodman Group is one of those that has sort of continued to sort of benefit from that as well. So it's ultimately the picks and the shovels of these of this sort of trend that are going to continue to sort of do well in the background as well. So it's not necessarily about sort of finding that name such as NVIDIA. It has had a huge run. If you haven't got onto that early enough, then that's no problem. There are going to be plenty of other names that continue to benefit from, what is a real technological advancement.
Also want to ask about travel, Qantas being the big one there, but there's plenty of others, Flight Centre, corporate travel management, etc. What's the outlook for those guys?
Yeah, well, we're coming off a bit of a weird time for travel, I think. We had a record year for Qantas in 2023, huge profits, but also at the same time, you've then got these huge issues from customers. We're now seeing, investigations into price gouging. They've had issues with unions. So it's a real mix. It's really difficult to sort of try and look at Qantas with just, through one lens, because there's really two sides of it. They're getting a real bad time in, publicly in the press, but in the background, the business is actually doing pretty well. Sales are still growing. They've got a strong balance sheet. They've got a solid foothold in the domestic market, and they're continuing to see growth in the international business as well, which is really important. That's where they make the bulk of their revenue. The domestic market is where the margins lie, but the international is where we see the sales sort of coming through. Then you take into everything else as well. We've got Vanessa Hudson, who's just sort of taken the helm as sort of CEO. So she's going to have her work cut out to sort of deal with all of those issues that I mentioned earlier. And the big task when you're coming in, when you've got profits at record highs, is shareholders expect that to continue. You want to keep profits steady. You want to sort of try and win back some of that positive publicity as well. So I think that's going to be really important for her to sort of try and get through. But I think, as you said, more broadly in that travel sector, we want to see how demand is holding up. This sort of boom that we had post-pandemic with everyone wanting to travel was this trend. But ultimately the cost of living is having a huge weight on consumers. So we need to see how that's ultimately affecting demand. Are people really going to be still spending thousands of dollars on holiday, when they're struggling to maybe buy food at the supermarket or pay their energy bill? So that's, I think, going to be a big takeaway for the travel names.
Just quickly on retail, we had a few last week where we had a Myer upgrade. We had Cettire, the luxury goods provider, perform pretty well. Nick Scali came out and surprised investors. Expectations aren't that high for the retailers relative to some of the other sectors, but thus far it's not a bad start for them.
Yeah, I mean, look, again, probably quite surprising to see, such positivity from those names. And I think maybe, as you say, given that we've not expected much, there's probably maybe a bit of room for the upside there, given that, the expectations are so low. Yeah. I think the focus here is that we have seen a slowdown in retail sales. In December, it was actually a real dire slowdown, a pretty torrid report that we got in December. But November is when we sort of saw that spending brought forward for Christmas, Black Friday sales. But then also on the other side of that, you had consumer confidence, which has been super low. I mentioned there about, interest rates, the cost of living. Retailers have, though, remained pretty resilient. I think not many people would have expected to see this sort of resilience that we've had from retailers. So I'd expect to see, some commentary around strong numbers in November. But as I mentioned, that sort of December slowdown in retail sales is going to really hurt them, I think. So I think if that is followed by any comments that the start of this year has been difficult, then that may be what investors narrow in on. We sort of saw that at this sort of time last year with retailers. They had a great end to 2023, but they said that the first 3 months of this year were going to be difficult, and that weighed on share prices to begin with. So any sort of weak guidance is really going to hurt them. And again, if we saw a big slowdown in sales in December, that's really going to be painful for those companies. So resilient so far, but I'm struggling to see how resilient these names can be this reporting season.
Josh, thank you for talking to Fear and Greed.
Thanks for having me, Sean.
That's Josh Gilbert, market analyst at social investment network eToro. This is the Fear and Greed Daily Interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Have a great day.